2% yesterday. Down again this morning. We got two members of the PayPal Mafia, investors David Sachs and Keith Leroy, to talk about
David Sachs.
Even as broader indexes remain near record highs. Speaking of a stock that's
We have David Sachs coming live on the program.
This revenue beat, what cloud and software stocks, if any, are safe to own right now. Plus one IPO to come in 2022. Reddit confidentially filing to go public. We're going to talk with some early investors in the company this hour, John.
Yeah, and we will start with Adobe and falling cloud-related stocks. Cloud and software names have been at the center of the sell-off in tech. Those ETFs down double digits in the last month. Hit hardest have been companies that don't yet have profits or where the multiples are highest. As for Adobe, well, that's not the case for that company. Earnings in line, revenue beats. It's the Q1 guide that's coming in below some estimates. Shares are falling sharply this morning. CEO Shantanu Narayan, who we spoke to on Monday, is on the call, which is starting as we speak. He'll be on Mad Money tonight at 6. Lastly, we will just point out Adobe's still up 15% year to date. If you got multiple years, it's one of the single best performing stocks in the S&P. Market cap right near $300 billion. Guys, it's rough in the daily action, of course. But given how much a stock like this has been up over the last couple of years, if you told me in January it would be up 15% at the end of the year, pretty good. But I think it speaks to the whole valuation question that we've been asking again and again, and how investors are going to treat these stocks, even ones that have a good amount, Julia, of growth and momentum in them.
Yeah, I mean, Adobe is such a fascinating one because on one hand...
Hey, Annie, can you grab me the ice? I forgot. I need to ice my back. Yeah.
Some displays on the couch, okay?
Yeah. Do you have like a tissue I can use or something to wrap around it, like a towel?
Use your towel.
That's fine. Hand me one of them. That's fine.
Don't leave it on the couch, okay?
Duh, that's why I have the towel.
Usually that's the time we put it on the couch and then the couch is open.
Yeah, we should also tell our viewers about the revenue projection that's really responsible for the sell-off today, John. They're looking for 2022 revenue 17.9. Street was 18.2. I mean, that's a very marginal miss. And Kramer's point this morning was that maybe some were looking at the high side of the range of estimates and selling in what Jim called a panic. He's going to, as you said, stand to Ryan on tonight, but warned this morning investors against getting too nervous about that outlook.
And this is not a bombastic company or a bombastic CEO, so you wouldn't expect Adobe necessarily to, in an uncertain environment, be too out there perhaps about projections. So that is to keep in mind. But of course, we'll want to see what Shantanu specifically has to say about the quarter. Now, we did talk to him on Monday, and part of what they are doing in the creative area of their business is this Adobe.
What's going on, Southern Life?
Which is a bit of more of an on-ramp into the creative product. But, we talked about metaverse to the degree that you believe that a metaverse is going to be overall a big opportunity. Adobe's digital creation tools.
So I might have to buy some Adobe after this live stream. I don't own that much, but I'm just going to diversify because I do think they have, their niche.
So this isn't just a creative play. It's also a play in changing how business.
Because a lot of stuff is made on Adobe, especially like design logos and stuff like that. But I don't see like, I do see a future where a lot of this software is going to be free. Microsoft and Google could offer free versions of this, or like a decentralized version of software. So I don't know, man. In the future, a lot of this software stuff is not going to fly because people can just make, decentralized platforms. This guy's the man, David Sachs. Turn it up for him.
I think it's mostly about whether they're growth stocks and how long dated they are compared to value stocks. Obviously, if interest rates are going up, then that increases the discount rate on those future earnings, and they're worth less in the present. So that's basically what's been going on. If you look at kind of the performance of growth stocks over the last 5 or 6 weeks. They kind of hit all-time highs around November 8th. That was the day that you had, at least 3 Fed governors, with very hawkish announcements about rate increases in response to an inflation print that was much higher than expected, around 6.8%. We've been told by the administration that inflation was transitory, obviously been more persistent than was expected. And so as a result of that, the market's been trying to price in these rate increases for the last 5-6 weeks. And that's really hurt growth stocks. So, from where I sit as a VC in Silicon Valley, in a way, we're investing in the most growth of growth stocks. We're invested in the most long-dated companies, the companies that have their earnings in furthest in the future. And so as a result of that, there's been sort of a trickle-down effect from the public markets to, I think, growth stage investors. And we're all kind of waiting for the VC market to find a new level.
Right. Do you believe that some of the growth drivers have truly dissipated because we are exiting a so-called COVID era, hopefully in the near future? Or what's durable in the way of growth drivers? And also, I should point out, the bond market's not completely convinced the Fed is going to be as hawkish as
we just wait and see.
Yesterday.
Wait and see.
Yeah, it's interesting. I mean, we've had a rally. We basically had a huge relief rally yesterday in the sort of second half of the market. I think there's 2 reasons.
What's up? Buy the dip and hodl.
The Fed finally provided some certainty, and it was in line with what people were expecting. But the other piece of good news that we got, frankly, was that the BBB, the Build Back Better bill, has been shelved till March. And the last thing we really needed in this sort of inflationary environment is $5 trillion of new spending, sort of pressurizing the situation. So I think the market kind of
we went to the birthday with
yesterday in terms of finally getting some certainty out of the Fed.
You forgot already?
That was in line with their expectations, and then we finally got some
What's that?
good news out of
Nothing.
Washington. I mean, in terms
What's
of
that?